Hello friends, let's continue with RTP September 2024. We'll complete the balance RTP and I'm going to start with the company accounts part, which is a very important part as far as examinations are concerned. So let's go for question number 14 of RTP. Happy Limited registered with an authorized equity capital of rupees 4 lakh divided into 4,000 shares of 100 each. So 4,000 shares of authorized capital, 100 rupees is the face value. Issued for subscription 2,000 shares. How many shares issued? 2,000 shares are issued. So out of 4,000 shares, 2,000 shares are issued. 25 on application, 30 on allotment, 20 on first call, and the balance as and when required. So first of all, guys, please make a note. Whenever they mention balance as and when required, means the call is not made. Means the final call is not made. So till now they have called application money of rupees 25, allotment of 30, and 20 on first call. Fine. Application money and 2,000 shares were duly received. So full subscription. 2,000 shares issued, 2,000 subscribed. And allotment was made to them. The allotment money was received in full. So everybody paid the allotment money also. But when the first call was made, when the company made the first call, one shareholder failed to pay the amount on 200 shares. One shareholder did not pay the first call on 200 shares held by him. And another shareholder with 100 shares paid the entire amount in his shares. Fine. One shareholder holding 200 shares did not pay the what? Did not pay the first call. And another shareholder holding 100 shares paid the entire amount of shares. So one shareholder is a calls in arrears for the company and another shareholder is calls in advance for the company. So one shareholder holding 200 shares, he did not pay the first call. So he will be transferred to calls in arrears. And another shareholder holding 100 shares paid the final call also along with the first call. Okay, fine. The company did not make any other call. Give necessary journal entries in the books of the company to record these transactions. Let's go for it. So directly we'll go with the solution. We'll just run through the concept quickly. Here it is. So first entry will be bank account debit to equity share application. 2,000 shares into 25, which will give 50,000. Then equity share application account debit to equity share capital, 50,000. Then equity share allotment account debit to equity share capital, 2,000 into 30 rupees per share, which gives 60,000 rupees. Then bank account debit to equity share allotment, 60,000. Now equity share final call account debit to equity share capital, 2,000 into 20, which comes to 40,000. And now when the final call was received, when the first call was received, one shareholder did not pay the first call holding 200 shares and another shareholder holding 100 shares, he paid the final call also along with the first call. So what we'll say, what is the normal entry for final call received, first call received, or whatever, any call received? Bank account debit to equity share first call. The shareholder who did not pay the first call money, he will be transferred to an account known as calls in arrears. So can I say bank account debit, calls in arrears account debit to equity share first call and to calls in advance. Now let's post the amount properly. How much equity share call debit? It was 40. So that much credit, 40,000. 200 shares into 20 rupees is the first call, that is 4,000, and 100 shares into 25 is the final call. So this is 2,500 and balancing figure will be 38,500. So this was a very simple sum as far as issue of shares was concerned. Let's go for the next sum of company accounts. It's issue and redemption of debentures. Let's go for it. Let's see whether issue of debentures is given or redemption of debentures. Well Done Limited issued 3,50,000, 12% debentures of 100 each at par. So can I say issued at par? How many debentures company issued? 3,50,000. Face value of each debenture is 100. Payable in full on application by 1st April. Entire money was payable on application itself. Fine. Applications were received for 3,85,000 debentures. So this is a pure case of oversubscription. Pure case of oversubscription. Debentures were allotted on 7th April. Fine. Excess money was refunded on the same day. You are required to prepare necessary journal entries including cash transactions in the books of the company. Let's start. Only two entries will pass. One is application received and one is application transferred, since the entire money is received along with the application. Let's go for it. Here it is. 1st April will pass entry. Bank account debit to 12% debenture application. It is 3,85,000 debentures into 100. So basically 3,85,000 into 100 divided by 1000, you'll get 38,500 rupees in thousands you have done. Then 7th April, 12% debenture application account debit to 12% debentures to bank. Here it is. They have passed two separate entries. We can pass combined entry. It is 12% debenture application account debit to 12% debentures to bank account. In debenture application, it will be 38,500. In debentures, it will be 35,000. And in bank, it will be 3,500. Balancing figure. That's it. Only issue of debentures, only two entries were asked. Very simple question. Let's go for the next part of the company accounts. Here it is. Let's see what is this regarding debentures only. A company had issued 40,000 12% debentures of 100 each on 1st April 2020. Company had issued 40,000 12% debentures of 100 each on 1st April 2020. The debentures were due on redemption on 1st March 2024. The terms of issue of debentures provided that they were redeemable at a premium of 5%. So redemption at premium means we are supposed to pay 100-105 rupees per debenture. The company offered an option to the debenture holders to convert redeemable value of 20% of their holdings into equity shares, nominal value 10 at a predetermined price of 15%. So company has given an option to the debenture holders to get their holdings converted into equity shares, and that also conversion will also happen at premium, because one equity share of 10 each will be issued at a price of 15 rupees. So 10-15, and 20% of the holdings were only given the option, and the payment in cash for the remaining debentures. 50 debenture holders holding totally 5,000 debentures. There are 50 people holding 5,000 debentures. So we are concerned with number of debentures only here. Did not exercise the option, means they didn't went for conversion. Calculate the number of equity shares to be allotted to the debenture holders and the amount to be paid in cash and redemption. Let's do this working for you guys. This is question number 16. I'll say we'll write the heading. Calculation of debentures, calculation of debenture holders opting for conversion and opting for cash. Total debentures how much? 40,000. Less, I'll say exception, because they didn't opted for it. So 35,000. These are the number of debentures eligible for conversion number of debentures eligible for conversion into rate of conversion, that is 20%. Conversion option was a yes. So this comes to 7,000 debentures. Number of debentures opted for conversion. Now, amount of debentures is equal to 7,000 into, it is redeemed at premium, so 105. 7,35,000. Number of equity shares to be issued is equal to 7,35,000 divided by issue price, and issue price is 15 rupees. One share is issued at 15 rupees, so 49,000 shares they'll get. Done. Number of debentures opted for cash is equal to total debentures 40,000 minus 5 were neutral, minus 7 opted for conversion. So this is 40 minus 5 minus 7. This is 28 we get actually. Plus 5,000 neutral people. Straight multiply by 105. 34,65,000. So it's very simple. Total 40,000 debentures. Out of that, 5,000 were neutral. They were not sure whether to go for equity shares or for cash, so they were removed. Less 7,000 those who opted for conversion. So balance left was 28 plus 5 who didn't decide anything. They are 100% to opt for cash only. So this is how it works. So number of debentures opted for equity and number of debentures opted for cash. This is how we have done it. Let's go for the next question. Company accounts. The 17th question. Following is the extract of the balance sheet of Gold Star Limited on 31st March 2024. Authorized capital 3 lakh equity shares of 10 each. 25,000 10% preference of 10 each. 2,70,000 equity shares of 10 each fully paid up. Issued capital 24,000 10% preference of 10 each fully paid up. General reserve free reserve. CRR not a free reserve, non-free reserve. Securities premium free reserve. And profit and loss free reserve. On 1st April 2024, the company decided to capitalize its reserves by way of bonus at the rate of 2 shares for every 5 shares. It means held and issue. For every 5 shares, 2 shares will be issued. Show necessary journal entries in the books of the company and prepare extract of the balance sheet after bonus. So 2,70,000 shares the company had. 2,70,000 into 2 divided by 5. So this comes to 1,08,000 shares. So let's go for the 1,08,000 shares of 10 each, which comes to 10,80,000. Let's go in the sequence. So the most priority capital redemption reserve CRR 1,20,000. Then after that securities minimum 75,000. Then general reserve 3,60,000, and then profit and loss balancing amount 5,25,000. Two bonus to shareholders 10,80,000. So this is nothing but CSCD, the code word. CRR, securities premium, no capital reserve. Then we have divisible profit. In that we have general reserve and profit and loss. So this is bonus declaration entry, and then after that bonus issue entry, bonus to shareholder account debit to equity share capital account. Now, how much authorized capital we had? Let's check. 3 lakh equity shares, and out of the 270 was issued. So 30 was the limit with us, and we issued 1,08,000 shares. 1,08,000 minus 30, 78,000. We exceeded the authorized limit. So we need to improve the authorized limit or increase the authorized limit. Authorized limit बढ़ाना पड़ेगा, तो वही किया होगा यहाँ पे, देख लीजिए. Here it is. 3,78,000 equity shares of 10 each, and 25,000 10% preferences of 10 each. So this comes to total. Issued subscribe also same 3,78,000 equity shares of 10 each fully paid up. And out of the above 1,08,000 shares are issued for consideration other than cash. This is the note which are supposed to write. And 24,000 10% preferences of 10 each, 2,40,000 and 40,20. Same reserves and surplus will go. CRR 120 utilized pool, so nil. Securities minimum 75 utilized pool, nil. General reserve 3,60,000 less utilized pool, so nil. Profit and loss 6 lakh less utilized 5,25,000. So 75 is the balance. Now a note, very important. Since the company has increased the authorized limit, a necessary approval from the SEBI has to be taken. The same note needs to be written. Authorized capital has been increased by the minimum required amount, that is 77,80,000. 37,80 minus 30 in the above solution, because approval needs to be taken before you increase the authorized limit. So this is all about company accounts, issue of shares, issue of debentures, redemption of debentures, and bonus shares. Thank you.